So firstly, help us understand what Fed Now is exactly.
Well, it is a settlement system for transactions, for financial transactions that is offered by the Fed and run by the Fed. In that sense, it's not really new either, because in other countries we have these systems already run by the central banks, and they've been in place for a long time, and there have been no issues. So it is possible to have the system, and it can run smoothly and doesn't need to be a cause for concern, and can increase speed of settlement and things like that. What is concerning is that we know that this has not been introduced so far in the United States. And why is it just rolled out right now, at a time when we do have concerns about the intentions of the central planners, because they have told us about those intentions. And central planners at the central banks have said, oh, banks, there are too many banks. And well, we need to improve the system by having more centralization. Well, that together with this introduction now is somewhat suspicious. And I think that is really actually the underlying reason why we have still worries about the banking system at the moment in the US. If you have the central bank on your side as a bank, and in general the banking system, then it's rare that you have bank runs. But I think what people have realized is, well, hang on, there's a conflict of interest. The central bankers want to compete against banks. So we can't really trust them anymore to really take the benevolent, policies that are good for society and create stability. Maybe there's a different agenda. Maybe it's all about rolling out their central bank digital currency. And you see, that's why this is, a genuine concern. And really, the central planners, the burden is on them to demonstrate that they actually have everyone's benefit and welfare at heart. We haven't seen much evidence of that.
Look, many are saying that the timing is very, very curious. We've had a slew of bank failures in the US, Silvergate, Silicon Valley Bank, Signature Bank, liquidated hundreds of billions of dollars in assets in Europe. Credit Suisse given a $54 billion credit line from the Swiss government to shore up its banking operations. We're seeing consolidation in the traditional banking system, which, as we discussed earlier in this interview, is not a good thing for a number of reasons, certainly economic freedom being one of them. And some have speculated that these ongoing crises will be exploited to bring about CBDCs. Nick Carter, who's the general partner at Castle Island Ventures, a big VC firm, which was an early investor in BlockFi and Bitwise, who's very vocal about these things, he tweeted out, "The political case for CBDCs became much, much stronger this weekend. The issue with CBDCs was always disintermediating commercial banks, but now that no one trusts commercial banks, ... So I think the implication is that since people don't trust their money with the banks, perhaps they'll be more open to this idea of a CBDC and money in their CBDC digital wallet. And this could be a way to sort of manipulate perception of this issue. What do you make of Nick Carter's assessment or views there?
Well, there's no doubt that this is how many people will see it. We can't trust the banks. And, oh, what alternatives are there? Oh, the central bank is offering this, very good. But at the same time, more and more people are realizing, as I'm sure he is, that this is intentional. Now, already 23 years ago, I warned about what I called regulatory moral hazard, or I also alternatively called it central bank risk, the risk that the central planners, the regulators of the banking system, have a different agenda because we've always rewarded them for each failure, for each crisis, by giving them more powers. And literally, you can go back to any major crisis, financial crisis. In the aftermath, the story is always, well, it's too bad this happened, and obviously we need more powers to prevent this next time. They say this each time. And each time we give them more powers, literally, more power to make decisions, interfere, and It's been quite dramatic in Europe. The ECB has become even more powerful, already was the most powerful central bank in terms of lack of accountability and so on. And so it's this regulatory moral hazard. So I warned, as a result, we're likely to see more and more crises.